The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It is Monday. It's Monday night here in the Philippines. And this is proof, if you're looking at the screen here, that I am actually leaving. And we'll be in the United States by Sunday. This is a heck of a storm that moved through here. And that's kind of a leggy flight there. 4 legs. Actually, not counting the one up to Manila. But the typhoon is kind of dissipated here and just a lot of rain. And that's still not good, but could have been worse. Could have been like last year. Here is the March contract to the 10-year. And we've been pretty bullish on the 10-year. And starting to see some cracks in the armor here. And I know we're right back down to where the basing action was, but I'm kind of regulating all things considered by these profiles. And as we had that pop and looked really good, and kind of came down, found some support after we had a orange bar here predicting a new profile. Just want to kind of give the train of thought here. When we break down below profiles, especially on an intermediate, I got to kind of regroup as far as, what I'm thinking on the long side. And 126.06 in this March contract, that close below that really was pretty damning for me. I know we have not gotten back down to the base area, but when we pull stunts like this and break down below profiles in this instance, you've got to kind of take that for what it's worth and sit tight a little bit here. Now, as we talk about all the time, the most recent profiles take a pretty serious prevalence in what's going on in the current landscape. So we came down this morning. We've reached a low of 125.17.5, and this particular profile low is 125, let's just call it 16. So we found some areas of significance being the former profile's unfair low. All right. Now, but think how many points you saved yourself if you just kind of said below here. You can obviously kind of, get back in the game down here based on what we just talked about. And, I would consider this no man's land. You've kind of got, in addition to the current situation, you've got some previous information here that's kind of flailing around in this area. So, getting below 126.06 and then finding 125.16 down here, or approximately 125.16, you kind of got just a mishmash here of, where does price actually need to lie? There's really no significant technical reasons to kind of be in something down here unless your time horizon and your threshold for pain or whatever you think your mousetrap is to trade the 10-year is a little bit lower, and you're kind of in it to win it in a very, very long sense. Here's the situation on the 240-minute, and we had some of those breakdowns, 126.10 here, the 126.06 we just talked about. Let me just make sure that's the right number, 126.06. So, in my opinion, you've kind of got to, on the 10-year, I think this is kind of a no trade right now. It's started the technical breakdown, and I'm just kind of a big fan of letting, especially daily configurations, kind of regulate my life when it comes to some of these trading opportunities. And I'm a big fan of trading on a longer term basis than trying to pick up the 60-minute and the 240 in general. 240 for me is kind of a regulator of the trade itself, and that's also telling me in this instance that it's really not okay to be long right now. So I know we've been preaching long for a long time on the 10-year, but this may be something we have to kind of take into consideration. And trading's trading, and hey, we got to be able to kind of roll with the punches sometimes. And I don't feel too rosy with that. What would make me feel real rosy on the 10-year? Getting back above 126.06 and 126.10 and closing above there, then I would feel more comfortable with this shooting for the 127s and higher. But right now, this thing could go a lot lower, and technically speaking, we don't have a lot to lean on right now. Well, here's the ruble. I know you guys are listening to news reports on what Putin's saying and basically everything he does lately. The Russians have had almost a pride in taking a lot of pain over the years and being stubborn. And, who knows if this is a right move or wrong move by Putin, but he doesn't care how devalued the ruble goes. I mean, he's prepared to take the pain. The Russians, what was that movie called? Enemy at the Gates? Was that the sniper movie where they sent if you ever want to see, they sent the guys into battle without a bullet. What was it? You should watch that movie. It's interesting. But it kind of proves some of the things I'm talking about possible Russian mentalities. While we're on the 10-year topic, I want to move down into just take one look at gold really quick. Got some cool stocks for you guys to look at today. Okay. Here's the weekly on gold, and he kind of ran out of gas, but at that weekly unfair high there around 12.18, I think we're at 12.20 or 21. Here's the daily situation. So, this was a $80 volatility day here, and we came down, and I love this action here. I loved it from the long side, and I love the way gold was hanging in there with the dollar, and a little bit of uncertainty out there, but we kind of caved in here on Friday, and now we're going back and retesting that support area around 1198. So again, I don't feel comfortable getting long this right now until we go back into the 1180 area or have a close above 1198. And gold has a tendency to drive me crazy sometimes. So, be prepared for herky-jerky action with this. But I'm still, to some degree, leaning towards the long side on gold. And, but that's what I need to see is closes above 1198 to start getting back in the game there, if that makes sense. Okay, so let's take a look at crude oil, because I know you guys are probably looking at crude oil and some of the latest news that this thing is just going to hell in a handbasket here. The weekly, nothing's changed. Just going to flash this for people who've been on another planet. Here's the here's the latest inflection points, which we also deliver this information via our scanner. And I'll pull this over here and just kind of let you see what's going on with I'll just pick futures here, and we'll get the landscape on crude oil really quick. And we're killing our indicator business by doing the scanner now, because everybody gets the numbers and quite a good look off the scanner in general. So let me find crude oil, and let me look at the numbers here. So 65.13 unfair lows, 70.77 up top. And just by mousing over, I get that. And as you can see here, there's just not a lot of reasons to get long crude oil right now, and there hasn't been a lot of reasons to get long crude oil. We were just kind of looking for migrations back up into inflection points. So, and we get the same information on gold here. I've got the S&P Mini I added up top there because I was looking at something earlier. But as we look at this, I'm just going to pull up West Texas. And as you can see, that's the level of the market, and these are the profiles. And can't argue with being short right now. So here's the landscape on the dailies, and this was the number we just spoke of, 65.13, 70.78 up top. And this is something, in my opinion, you can leverage off of, and we're getting near kind of these most recent lows. And those recent lows were 63.72, so we've reached a low today of 64.10. So things on our lows go lower. So 65.13 and 65.08. We got a current 240 profile, which is also lending some credence to what we're talking about. So again, until we have some changes and get back above 65.13 and 65.08, there's not a lot of reasons to pick any battles here on the long side yet. We could always, do a reversal and get back in the fair auction and start kind of stopping some people out here who are playing this now for it to do a washout and get quite a few folks out of the marketplace. Those trade, there's no free lunch in those types of trades, so you always got to put the stops in and be prepared, to conserve capital at all times. As a trader, that's your main job, is to be able to go home at the end of the day, kind of bring your ball back the next day and play. You don't want to, bet the farm on anything, so to speak. Here, that's the situation on crude oil. I want to look at the euro, and we're going to pull up some stocks next segment and the segments thereafter. Here's the situation on the euro. There's really no changes here, and I'm about as bearish as I've been this past year on this thing right now, even though we're sitting, let me try to get this chart right, even though we're sitting on all-time lows here, or most recent lows, this 124.32 area, obviously 2 days ago or Thursday, we just kind of ricocheted back up in there. Eddie was talking about how free of a situation that was, and just a blessing for it to migrate back up in there and kiss that. A little bit of noise around it. 20 ticks, I believe, it overshot it. But now, these, and I know this looks like a divergent situation here with the euro, but I told you we were kind of ignoring that right now. And trying to mix in some of the overhanging fundamental situations here. So the short-term numbers on the euro, 122.96. Let's see how we kind of got below there and came back and retested it. It's a very strong situation, even on a short-term setup. And, where do we kind of call it quits on this type of trade? On the short term, I think you got 123.42. You got to be looking to, possibly stop yourself out there. And on the longer term, I think above 124. Let's see here. Hold on. Let's just restate those numbers. I'm sorry. 123.43 rounded off. And then on the intermediate, I think if we get any closes above 124.32, we're going to have to just sit tight on it for a while, because the tone may be changing a little bit. I mean, things don't go in a straight line here, folks. So just keep that in mind. The yen, I'm over in Asia, and this has just been something unbelievable. And we talked a lot about the spread, so-called spread, between the yen and the Nikkei, and how I thought that was going to widen significantly. We're going to come back and talk about that spread a little bit. Hang around, folks. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rose, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We've got the Nikkei up right now. Just want to show you the weekly. Excuse me, let's just go to the daily. It's not a lot of data here on the weekly. This is the daily on the Nikkei. Obviously, we had a breakout above 17,595, close above, didn't even retest it, start going north here. But we talked back in, let's see, 3 to 4 weeks ago when we had this big orange bar and we had some deeper recession talk from Japan. And I mean, just negative growth, basically. That decoupling of that move up by the yen and the Nikkei, just the devaluation of the yen and the Nikkei being priced in yen and things like that. That decoupling that day we talked about, that was going to kind of, that spread, so to speak, was going to have to be hopefully taken advantage of by someone. And, we talked about balancing the equation. We talked about, a long time ago, we used to really do a very good job at balancing the equation. S&Ps equals Dow plus NASDAQ. And you just kind of play around with the ratios, and it was a great trade for a long time. I haven't even looked at it in a while, but just if you want to chart something really cool, do that. I mean, 10 S&P or just have the same monetary value of the S&Ps on one side of the equal sign, and then play around with the, I think we used to have something like 83, I want to say 100 S&Ps equals 83 Dow plus, the ratios are different now, but like maybe 25 NASDAQ. But whatever monetize-wise balances out that equation, it's interesting to chart something like that and see where the extremes are. Costs a lot of commissions to do that trade. You need cheap commissions, just like we always do. But this kind of rebalancing of the yen monetarily on the same wavelength as the Nikkei, we talked about that spreading out, and that's continued to do that. So interesting little trade. You might want to take a look at it, because that's the Nikkei, and here's the yen. I can find it. I think we hit 122. I mean, look at this chart relative to the Nikkei. And that decoupling started 3 or 4 weeks ago. I think right in there. So take a look at it. It's an interesting trade to look at. Here's the situation on the Australian dollar. We were very bearish on this. And here's the daily. I'll just kind of focus on this. Let me pull up the weekly first. Mike, we got some bad ticks in some of these charts, or the levels are, see what I mean? They're kind of, there's a lot of those on, I don't know why that's happening. Just, you know what I mean? That kind of stuff. Okay, just letting you know. So we closed below and did the retest, the powerful trade, and we talked about the overhanging fundamental stuff, if you will, going on in Australia, and the MO again by a central bank to drive their currency down to fix economic problems, and who knows how this is going to end. And it's amazing, our dollar is just going through the roof now. But and we got a guy from Australia here that was exchanging money, and he was having a tough time believing how little money he was getting for Australia. The last time I was in Australia, it was trading 108, I think, and now we're trading 82, sub 82. So this has been a decent little trade to lean on based on the weeklies and the dailies. And here's the dailies. And why am I talking about it again? This divergence that we talked about here, we talked about the overhanging fundamental reasons and just ignoring this normal divergence on the technical side that we've been looking at, traditionally speaking. There's not a lot of reasons to take this trade off. We don't have any new profiles appearing. It's been a nice little gift recently from around the 87 and a half area, and we're trading about 500 pips lower, which is just insane for the Australian dollar. To move like this, but hey, it wants to be lower, and this is kind of the way it works. So the only thing you can, in my opinion, glean off of this, I mean, if we start rallying back into the 83 and a half, 84 area, we more than likely will get a new profile to lean on the daily. And I hear the music, so we are going to be right back in just a little bit, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights, and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We were recently talking about the Australian dollar. We're going to kind of jump forward here. And as we look at the oil stocks, I want to just kind of bring up the scanner and just kind of paint a picture here. So here's some of the ETFs that we look at. I think I covered these quite a bit in the past here. The energy obviously is looking hellish here. Everything else looks relatively good. Just not a lot of bad situations here as far as the ETFs as a whole. But let me do something for you here. We look at this pretty much every time we have a show, and we want to kind of peruse through this right now. And let me first of all state that we'll be doing a deep dissertation on this Tuesday night, or Tuesday early night, about 6:30. If you sign up for a free trial of this scanner, you're going to be able to attend the webinar then. And that is literally tomorrow night. So we'll be able to kind of get into the nuts and bolts of this particular piece of information that you're looking at now, why it's so important, what we've done to kind of validate some of the things we talk about with this, and how this system, if you will, is really borne out in quite a few other different baskets of stocks, being the Shanghai, which is just going nuts right now. And the breadth situation in other indices and how we back-tested this. This is one of the things we're going to talk about amongst many, but how that particular set of criteria really gives us a chance to figure out, what are the leaders relative to the rest of the pack doing in any disconnect or connect fashions. And in my opinion, this little bit of information here gives you so much more deeper understanding of where stocks are relative to the imbalance on the upside, the downside, or in the middle. And we'll kind of cover as much as we can about that. But let's just kind of, for example's sake, let's just take a look at the S&P 500. We're still breadth positive, pretty decently fashioned here. A little bit of crack in the armor on the 60-minute, but that's a little bit more volatile situation. So let's pull directly into the S&Ps. C4. And what this does for me, we've talked about this. Sorry guys, I'm going to turn off something here. What this does for me it allows me to eliminate one side of the marketplace. And there's a lot of things you can do with the scanner. The breadth piece that is just one little facet of it, but it's a very powerful facet of it. So what it really does for me is we talked about this inflection point here, 2075, unfair highs on the daily. We're well above profiles on the weekly, but we talked about, is this the smartest trade in the world, trying to short, for starters, off of all-time highs, and also with the latest activity, the way it looks here, technically speaking, and also with the breadth not in your favor. Now, again, I think all-time highs are 2079 on the December contract. We're trading 2069. Is that right? 2079, 2069. So you missed 10 points off all-time highs if you didn't get into that short. And how smart is that? I mean, I don't know if that's that smart. Because your risk is tremendous, in my opinion. This thing blows through, considering that all stocks are relatively breadth positive. And we're going to get into that, how these inflection points on the index, have always been, in my opinion, the battle points. But now you've got an extra edge that's going to hopefully kind of guide you through the minefield of trying to trade these things on quite a few different time frames. So we're kind of back down in the middle of the fair auction, but the breadth is positive. So here's the short term. Here's the 240-minute lows here. 2069. We're trading 2069 rounded off right now. And the breadth can change. I mean, that's why it's important, I think, to have this product so you can real time figure out, where the numbers are as far as the breadth. I mean, we actually spend a ton of money on this crunching numbers, and it's actually updating every 60 seconds with real-time data. So we're not breaking any exchange rules here, giving you real-time signals, but not actually disseminating real-time data. So, the level of the market is being considered in all the numbers and all the crossovers, and it definitely is being considered in the breadth itself. And it's amazing with the computers today how you can actually crunch all this, and this is a tremendous amount of things going on at one time to produce this, but we could output it probably once every 30 seconds, but we're just doing it once every 60 seconds because I don't know if anybody needs it every 30 seconds. But so, we're going to look and wait and see how the market opens today, but these numbers are not going to change that much, and they may change intraday, but if you have this and you start seeing these things cross over, then it might be okay to start picking some battles on the short side. Now, the cool thing is that we've noticed in our back testing is that, these breadth numbers usually will change before, if the market rolls over and starts trading down 40, 50 points and then the breadth goes negative, I mean, what is it worth? I mean, it's kind of a lagging indicator, so to speak. A lot of times this thing will forecast when these changes will start happening. And it's truly amazing some of the things that we've noticed in the backtesting arena with this. So, again, we're kind of at all-time highs here, still in the neighborhood. And if these things start shifting, I will feel I do not want to touch this from the short side right now based on what we just talked about. But if we start changing breadth and, some of the stocks are sitting right at some thresholds that may dump over into, below profile situations or within profile situations, these will change. But they haven't been forecasting any reasons whatsoever to get on the short side yet. And I'm going to stick with that as a sole guider of my life as far as trading goes here. So I'm going to get rid of the ETFs here. I'm going to uncheck that. I'm going to choose the S&P 500. And as that's loading, excuse me, had some stocks picked out here. I want to take a look at GoPro. Wait for this to load. Okay. Somebody was asking me about this today, and the scanner actually had kind of picked this out because we're very close to an inflection point there. And that's the situation on GoPro, just kind of stepping back from it a little bit and looking at what's going on. We've tried to get back into a fair auction here a couple of weeks ago, and now we've rallied up and we're sitting right there. Considering that again, this is playing the odds. I don't have a crystal ball, and I don't know what's going to happen here. But, there's a lot of shorts in this stock. There's a tremendous amount of shorts still in this stock. And, this type of action in general and kind of trying to stay above profiles, if we get a close again, just like we did back, what's that, 2 weeks ago, week and a half ago, it may get some legs again. The 240s are here to regulate those types of trades, but the breadth on the broad market is still positive. And GoPro looks to me that it doesn't want to go down. It's had a lot of reasons that it could go down, but if the market continues to go north and we break out above, I think we may see this thing climb again. But on that note, anything below 66.77 on a long-term basis, I think you're going to have to pay attention to that and consider this something you need to sit on the sidelines from the long side and actually consider possibly looking at it from the short side, just like we had back here. This is our daily situation. This was the numbers that we looked at. It's just turning the rents the same way, 84.47. We open below. That's a no-no for being long. That's a no-no for being short. All right, that's a no-no for being long. So we've kind of allowed this, and there's a lot of other things that you can factor into biased opinions around these profiles. I do. I think it's very valuable to talk about some of those things, and we're going to talk about them tomorrow night. But the scanner itself is going to give you these inflection points to pay attention to, and also pick these situations out. And that was one of the reasons that we're talking about it today. Is like it's in the wheelhouse of high probability areas to look at. So right now, I would be a fan, considering that the volatility is kind of crunched in a little bit here, but we're still trading above profiles for the most part. This, to me, with the navigator kind of revolving around zero down here, could be a nice breakout situation on the upside. And you need to put stops in for things like this. So that's my take on GoPro. I wanted to look at IBM really quick. We've talked about this. I don't think there's a better short situation on the books right now. But again, stops have to be, put in place for even things like this. And the stop, some guys were calling me about this today. It's not in any cooperation manner whatsoever with the S&Ps right now, and it's I think it was the only stock down in 2013 is in the Dow, and it may have that same header after this year. But here's the situation: 165.04. I'd have to put stops in above there based on my appetite for risk. And if the stock starts climbing, it could squeeze a lot of people out of it. I mean, that's just IBM's nature has been crazy over the last. I've been trading this thing for 20 years, and it's just, at times made some crazy moves in one way or the other. But if you're going to trade this from the short side, you may be able to kind of double up down here below 162.27, but stops have to be oriented, in my opinion, above 165.04. And it's definitely the relative strength trade of the day right now. I want to pull up Tesla. These are just some things that people are asking me about. Here's the weekly situation on Tesla. As you can see, we started, caving in, okay to be short, not okay to be long on the long term here, and on the intermediate, that 243 area we talked about was lining up with 242 on the weekly, and both of those numbers are displayed here on the scanner. But again, this is basically saying if you're going to try to be long Tesla, on an intermediate to long-term basis, you don't have a lot of reasons to switch into long mode. On the 240s on Tesla, I can get this to come up here. As you can see, once we started trading down below the 242, 243 area, the 240s have kind of kept you in that short mode. And right now there's just nothing down here to pick bottoms on, and this thing may drift a little bit lower. I love this company, but it's just technically not looking very ripe right now. Okay. Let's see, Amazon. I wanted to pull this up today. This was another holding, one of the guys who calls me every week. 322, 327, that was the DMZ that we had to hold on to for Amazon. This is our daily. And when we got below that DMZ, it was okay to be short, not okay to be long. And the more important thing is not okay to be long. Here's the 240-minute situation on Amazon, just kind of letting that regulate and trail down, same situation. The stock WTR. Let's look at Twitter really quick. As you can see, this hadn't been a rosy situation from the time back when I think we had the just move back a little bit here. Yeah, we had some earnings announcements then. I believe that's what that was. This hasn't been a rosy situation, technically speaking, to try to get long. You really haven't gotten above profiles on the intermediate time frames, and you've had some decent shorting opportunities here. Had some noise here, but these inflection points, when we're kind of relative strength-wise not cooperating with the market, you're looking for areas to pick battles, and you were given one around 42.05, and now you got another one from a leverage point around 39.68, and that worked out pretty well. Let's just see here. What's today's price? 38. Just make sure we're looking at the right thing here. Okay. Thursday's action, going back and retouching former support, now resistance, and coming back down. This was Friday's action, and we're trading actually lower now. So 38.15 pre-market, and that was 39.68. So you got $1.50. So what is that? That's about a 5% move in 2 days, keying off some of that unparalleled inflection point from the daily off Twitter. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open, even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back. All right, so we're taking a look at the NASDAQ right now, but I just want to kind of bring up I want to call it the hand of God, but something that has really been astonishing to keep me out of trouble. And as we know, nothing's a crystal ball. Nothing's going to always work, but it's historically, percentage-wise, worked extremely well from the testing we've done. Here's the NASDAQ breadth, still positive here. And again, this could change. If you have this scanner, you'll know when it will change. And by the way, we're putting this, should have done this a while ago, but we're putting these speed dials, speedometers, if you will. What the heck just happened? We're putting these speed dials across the top, so they'll kind of always be in your face and be able to choose those as you see fit. All right, so let's take a look at the NASDAQ. Here we go. Let's blow this up because the NASDAQ's just been in crazy move up. Anyway, the inflection point's 43.33 to pay attention on the NASDAQ. We came off of there, but remember, folks, we are just smidgets off of all-time highs, and 42.60 is going to be big-time support for this. Why? If the breadth still stays positive on the long-term and intermediate term, I think you need to consider looking at this as a support area for the NASDAQ. Now, any closes below there, remember, the same things kind of work together. It's on an intermediate basis, it's not okay to be long if we close below the 42.60 area. But if the breadth is positive, we may not want to start taking shorts yet. And just as we saw the S&Ps the other day, and I'll just give you a case in point, just to give you a little bit of a primer here. This was the situation on the S&Ps, and man, see if I can get this where you can see it easier. Okay, so breadth was positive, and as we started turning into a red bar here and getting, this is something we'll go over in the discussion tomorrow night, but we went back up into this inflection point here around 2059, and we passed on those shorts because the breadth was positive. So you're still looking at inflection points on some of these indexes that breadth's provided on. But is this a high probability setup? Under normal circumstances, I would say yes. But if the breadth is positive, are you beating your head against the wall? Because this is something that you may need to pass on, because remember, the breadth is going to hopefully eliminate one side of the marketplace for you. In this instance, eliminate the short side. Therefore, we may not want to take those shorts. All right, so lo and behold, breadth positive come up, and then we're off to the races again. So the breadth's still positive. We may not want to take these shorts around here, because this is what I would consider at this stage a relatively low percentage trade. Now, this may cave in for the biggest move down in the history of the world, but right now, the odds are that may not happen from a pure normal trading situation evolution. And if we get down into the 259 area here on the S&Ps, the support area, which we bounced off of before, if you can see that, this is something we got to take a look at the breadth at the time. And if we close below it and the breadth's still positive, we're just going to sit tight here, and we're just going to try to play the odds on that one. Stay tuned. Steve Rhodes was asking about the typhoon over here. Yep, it's kind of dissipating, and a lot of rain, tons of rain, but I'm waiting for the flight to kind of clear out now. Stay tuned for Steve Rhodes' show, Trader's Edge. He'll be up next. You'll thoroughly enjoy it. And got a big webinar tomorrow night, guys. Hope you're there.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.